Hello and welcome back to Money Mastermind. Today we are exploring financial strategies that can help you make big gains in the stock market. Now let's get started, but first, if you enjoy this content or anything related to investing, be sure to like and subscribe for more videos like this. Now let's get straight into it. In stock market investing, the pursuit of substantial gains stands as an unending goal for investors worldwide. This is often marked by countless strategies, each promising varying degrees of success. However, among a lot of approaches, three strategies continue to prove crucial to navigating the financial markets: technical analysis, fundamental analysis, and rigorous risk management. In this video, we explore these fundamental strategies, recognizing their pivotal roles in shaping successful investment endeavors through the lens of technical and fundamental analysis. Alongside meticulous risk management, you can not only uncover profitable opportunities, but also shield yourself from potential pitfalls. Technical analysis serves as a cornerstone, providing insights into market trends, patterns, and price movements. Conversely, fundamental analysis delves deeper into the intrinsic value of assets, analyzing financial data and economic indicators to unearth promising investment prospects. Together, these analyses form a powerful framework for informed decision-making. We also highlight the critical importance of risk management in safeguarding investments. By implementing wise risk mitigation techniques such as stop-loss orders and diversification strategies, you can mitigate potential losses and preserve capital. Throughout this exploration, we offer a comprehensive overview of each strategy's principles and practical applications, aiming to equip you with the tools and knowledge necessary to navigate the stock market with confidence. Technical analysis serves as a pillar in deciphering the complexities of the stock market, offering insights into historical price movements and forecasting future trends. Understanding its significance is crucial to make informed decisions and capitalize on market opportunities. At its core, technical analysis involves the study of past market data, primarily price and volume, to identify patterns and trends that can help predict future price movements. By analyzing charts and employing various statistical tools, you gain a deeper understanding of market perception and potential trading opportunities. Key technical indicators play a vital role in this analysis, providing valuable signals about market direction and momentum. These indicators include moving averages, relative strength index, and stochastic oscillators, among others. Each indicator offers unique insights into market dynamics, helping you measure the strength of trends and identify potential reversal points. Chart patterns are another essential component of technical analysis, offering visual representations of market and investor behavior. Common patterns such as head and shoulders, double tops and bottoms, and cups with handles provide valuable insights into potential price movements and trend reversals. By recognizing these patterns, you can make more informed trading decisions and manage risk effectively. In today's digital age, the use of tools and software has become irreplaceable for technical analysts. A wide range of software programs and online platforms offer advanced charting capabilities, technical indicators, and real-time market data. These tools enable you to conduct comprehensive analysis efficiently and execute trades with precision. Whether it's using popular charting platforms like TradingView or leveraging algorithmic trading software, incorporating technology into technical analysis can significantly enhance decision-making and simplify the trading process. In summary, technical analysis plays a crucial role in understanding market patterns and providing valuable insights for you. Understanding its significance, identifying key technical indicators and chart patterns, and utilizing advanced tools and software are essential steps for navigating the complexities of the stock market and achieving investment success. Fundamental analysis is another pillar of investment decision-making, offering a comprehensive understanding of a company's financial health and intrinsic value. This section investigates the essence of fundamental analysis, its significance, and the methods employed to assess the worth of stocks. Fundamental analysis entails a thorough examination of a company's financial statements, management team, industry position, and economic factors to determine its true value. Unlike technical analysis, which focuses on price movements and market behavior, fundamental analysis dives deeper into the underlying fundamentals of a business. Evaluating financial statements, including balance sheets, income statements, and cash flow statements, provides insights into a company's profitability, liquidity, and financial health. By analyzing key financial metrics such as revenue growth, profit margins, and debt levels, you can determine the financial health and stability of a company. Earnings reports released quarterly by publicly traded companies offer valuable information about their performance and outlook. Analysts assess factors such as revenue growth, earnings per share, and guidance to determine whether a company is meeting expectations and ready for future growth. In addition to financial statements and earnings reports, fundamental analysts rely on economic indicators to assess broader market trends and macroeconomic conditions. Indicators such as gross domestic product, unemployment rates, and consumer confidence can provide valuable insights into the overall health of the economy and its impact on corporate earnings. Ultimately, fundamental analysis aims to assess the intrinsic value of stocks by comparing their current market price to their underlying fundamentals. Common valuation metrics include price-to-earnings ratio, price-to-book ratio, and discounted cash flow analysis. By estimating a company's future cash flows and discounting them back to present value, you can determine whether a stock is undervalued or overvalued. In summary, fundamental analysis is a critical tool for investors seeking to make informed investment decisions based on a thorough understanding of a company's financial health and intrinsic value. By exploring financial statements, earnings reports, and economic indicators, and assessing fundamental metrics, you can identify attractive investment opportunities and build a solid foundation for long-term wealth creation. Effective risk management is vital in navigating the uncertainties of the stock market and safeguarding your investment portfolio. This section highlights the critical role of risk management and outlines key strategies to mitigate potential losses. Recognizing the importance of risk management is the first step toward building a resilient investment strategy. Markets are inherently unpredictable, and unforeseen events can lead to sudden downturns. By acknowledging the inevitability of risks, you can take proactive measures to protect your capital and minimize losses. Implementing stop-loss orders and position sizing techniques is essential for controlling risk exposure. Stop-loss orders allow you to set predetermined price levels at which your positions will be automatically sold, limiting potential losses. Position sizing involves allocating a specific percentage of capital to each trade, thereby diversifying risk and avoiding overexposure to any single investment. Diversification is a key component of risk management, spreading investments across different asset classes, sectors, and geographical regions. By diversifying your portfolio, you can reduce the impact of adverse events on your overall investment performance. This approach helps mitigate specific risks associated with individual investments while potentially improving long-term returns. In conclusion, safeguarding your investments through effective risk management is crucial for long-term success in the stock market. By recognizing the importance of risk management, implementing stop-loss orders and position sizing techniques, and embracing diversification, you can navigate market volatility with confidence and protect your capital against unforeseen risks. Achieving success in the stock market often requires a diverse approach that integrates various strategies harmoniously. Combining technical and fundamental analysis offers you a comprehensive view of market dynamics and potential investment opportunities, while technical analysis focuses on price movements and chart patterns. Fundamental analysis delves into a company's financial health and intrinsic value. By merging these approaches, you gain deeper insights into market trends and identify high-probability trades. Aligning investment decisions with risk management principles is essential for preserving capital and minimizing losses. Even the most promising investment opportunities carry inherent risks, and effective risk management is crucial for mitigating these uncertainties. By integrating risk management principles into their decision-making process, investors can protect their portfolios from adverse market movements and preserve long-term wealth. Integrating technical and fundamental analysis with robust risk management principles is key to achieving optimal results in the stock market. By combining these strategies effectively and learning from real-world examples, you can improve your decision-making process and position yourself for long-term success and prosperity. Access to the right tools and resources is essential for implementing effective investment strategies in the stock market. This section explores key platforms, software, and resources that can aid you in technical analysis, fundamental research, and risk management. Recommending platforms and software for technical analysis is crucial for traders seeking to analyze market trends and patterns efficiently. Platforms like TradingView, MetaTrader, and Thinkorswim offer advanced charting capabilities, technical indicators, and customizable features that cater to traders' diverse needs and preferences. These tools allow you to conduct comprehensive technical analysis and make informed trading decisions. Accessing reliable sources for fundamental data and analysis is crucial for investors seeking to evaluate the financial health and performance of companies. Financial news websites, company filings, and research reports from reputable sources such as Bloomberg, Reuters, and Morningstar provide valuable insights into earnings, revenue, and other key metrics. Also, financial databases like Bloomberg, Terminal, and FactSet offer comprehensive datasets and analytical tools for in-depth fundamental research. Utilizing risk management tools and calculators is essential if you are looking to protect your capital and manage investment risks effectively. Tools such as risk parity models, value-at-risk calculators, and Monte Carlo simulations enable you to assess portfolio risk, identify potential vulnerabilities, and implement appropriate risk mitigation strategies. Also, online brokerage platforms often provide risk management features such as stop-loss orders, trailing stops, and portfolio rebalancing tools to help you manage risk efficiently. In summary, leveraging the right tools and resources is crucial for successful execution of investment strategies in the stock market. By utilizing platforms and software for technical analysis, accessing reliable sources for fundamental research, and employing risk management tools and calculators, you improve your decision-making process and navigate market uncertainties with confidence. In the developing landscape of financial markets, embracing continuous learning and adaptation is essential to stay ahead of the curve. This section highlights the dynamic nature of financial markets and emphasizes the importance of staying informed, adaptable, and receptive to new information and insights. Factors such as economic indicators, geopolitical events, and technological advancements can influence market dynamics and asset prices. By acknowledging the fluidity of financial markets, you can better prepare yourself to navigate uncertainties and capitalize on emerging opportunities. Staying aware of financial news, market developments, and industry trends allows you to identify potential risks and opportunities in real time. By leveraging a diverse array of information sources, including financial media, research reports, and expert analysis, you gain valuable insights into market dynamics and make timely investment decisions. As you gain experience and insight from your investment journey, you should continuously evaluate and adapt your strategies to align with changing market conditions and personal objectives. By learning from both successes and failures, you refine your approaches, mitigate risks, and improve your overall investment performance over time. In conclusion, continuous learning and adaptation are integral to success in the dynamic world of financial markets. By recognizing the dynamic nature of markets, staying informed on market trends, and refining strategies based on experience and new information, you position yourself for long-term success and prosperity in finance. Navigating the stock market comes with its share of challenges and pitfalls, but being prepared to address them is key to long-term success. This section addresses common obstacles in implementing investment strategies, provides tips for overcoming psychological biases, and offers strategies for staying resilient during market downturns. Addressing common obstacles in implementing investment strategies involves recognizing and mitigating potential barriers to success. Whether it's technical challenges in executing trades or uncertainties in interpreting market data, you must proactively identify and address these obstacles to ensure smooth application of your strategies. Tips for overcoming psychological biases and emotional decision-making are crucial for maintaining a disciplined and rational approach to investing. Emotions such as fear, greed, and overconfidence can cloud judgment and lead to impulsive decisions. By practicing mindfulness, adhering to predetermined trading plans, and seeking objective perspectives, you mitigate the influence of psychological biases and make more rational investment decisions. Strategies for staying resilient during market downturns emphasize the importance of maintaining a long-term perspective and staying focused on investment goals. Market downturns are inevitable, but they also present opportunities for value investing and portfolio rebalancing. By diversifying portfolios, maintaining a cash reserve for buying opportunities, and avoiding knee-jerk reactions to short-term market fluctuations, you weather market downturns with confidence and emerge stronger on the other side. In conclusion, overcoming challenges and pitfalls in the stock market requires a combination of foresight, discipline, and resilience. By addressing common obstacles, overcoming psychological biases, and implementing strategies to stay resilient during market downturns, you navigate the uncertainties of the stock market with greater confidence and achieve your long-term financial objectives. In conclusion, the significance of technical and fundamental analysis, alongside robust risk management, cannot be overlooked in the pursuit of financial success in the stock market. These strategies provide you with the tools and insights needed to navigate the complexities of market dynamics and make informed investment decisions. We encourage you to incorporate these strategies into your investment approach, recognizing the value you offer in mitigating risks and maximizing returns. By integrating technical and fundamental analysis with effective risk management principles, you better your decision-making process and position yourself for long-term success. We reinforce the message of patience, discipline, and continuous improvement as essential elements for achieving financial success in the stock market. Investing is a journey that requires perseverance and adaptability in the face of challenges and uncertainties. By maintaining discipline, staying patient during market fluctuations, and continually seeking opportunities for improvement, you increase your chances of realizing your financial goals and securing your financial future. Thanks for watching Money Mastermind. If you enjoyed this video, be sure to check out our other videos for more investing tips. Don't forget to like and subscribe to stay updated on all our latest videos, and we'll see you in the next one.